What is up, guys, and welcome to another edition of the Market Marauder Show. Being the market one trade at a time. Alright, so we're on episode 223. Today we're going to be talking about market indicators, inflation, and some penny stocks that I will be watching for the upcoming week. So let's jump into it. Alright, so first, the market indicator that I want to talk about is the Hindenburg Omen. So the Hindenburg Omen is a technical indicator created to signal higher probability of stock market crash. It does this by comparing the percentage of new 52-week highs and lows in the stock price to a specific reference percentage. However, it is only correctly predicted significant market declines to about 25% of the time. So, as you know, there's a lot of volatility in the market. Inflation numbers recently came out, which we'll be talking about a little later on in the slide. But there's a very volatile market going on. Today, it seemed like a lot of prices were going down, and then towards the end of the day, they kind of shot back up. So a lot of volatility overall. Some people are saying it's going to crash. Some people are saying it's going to rise once, you know, the inflation data continues to come out positive. Then the Fed starts to cut interest rates. But overall, I think everyone's feeling the pain of inflation with a lot of different um, items that you normally get costing more than normal. So the criteria for the confirmation for the Hindenburg Omen signal to be active, four criteria must be met. One being the daily number of new 52-week highs and lows must exceed the threshold, usually around 2.2%. And the 52-week highs cannot be more than twice the 52-week lows. The market index must be an uptrend, and the McClellan oscillator MCO must be negative. And so the signal remains active for 30 trading days, during which any additional signals are ignored, and it is confirmed that the MCO stays negative during this period. So there are some limitations to the usage or utilage of this. Traders may use the Hindenburg Omen in conjunction with other technical analysis tools to decide whether to sell or short the market. For instance, they may look for the breakdown from key information support levels before acting, despite the historical use, such as avoiding the 1987 to 2008 market crashes. The indicator success rate of 25% means it often gives false alarms, necessitating its use alongside other confirming signals. So when trading, you want to come up with your own strategy. The Hindenburg Omen, I would say, is one indicator to look at. You also have this McClellan oscillator MCO. You can use moving average 50, 20. I mean, whatever number you want to use. There are a lot of different trading signals out there. You have Fibonacci numbers that you can use as well. There are tons of candle patterns and uptrends and downtrend charts you can use to determine. Just make a strategy, stick to that strategy, test that strategy so that you can become a better trader overall, whether that you're doing long-term investing and dip buying, or you're doing options trading, or you're just day trading regular stocks. Next, we'll talk about inflation numbers. So inflation numbers did come out today. Uh, the inflation and market reaction, the personal consumption expenditures, or PCE, which you may hear a lot of people talk about PCE price index. The Federal Reserve preferred inflation gauge rose 2.7% year over year in April, aligning with expectations, and the core PCE, excluding food and energy, rose 2.8%, slightly higher than anticipated. This data released today or this morning prompted a late afternoon rally and saw the Dow Jones Industrial Average rise by 1.5% and the S&P 500 by 0.8%, while the Nasdaq remained flat. And so, economic indicators and business activity, the Chicago Business Barometer, which is an indicator of business activity, fell more than expected to its lowest level in 4 years, signaling declining business activity. Despite these mixed economic signals, the U.S. indexes achieved monthly gains for May, with the Nasdaq up nearly 7%, despite a weekly loss of 1%. So, meanwhile, the benchmark Treasury yield fell with the 10-year yield logging its biggest monthly decline of the year at 4.512%. Consumer spending and market movements. So consumer spending rose 0.2% in April before adjusting for inflation, but slightly with the inflation was considered, indicating financial stress on American households. Most spending on necessities like rent, utilities, and medical care, leaving less for discretionary items. And this shift also led to reduced recreational spending and fewer car purchases, pursuing auto dealers to cut prices or offer incentives. In corporate news, the Gap stock surged 29% after earnings, while companies like Dell dropped 18%, and silver had its best month since March of 2023, rising 15%, whereas oil prices fell, and the Brent crude futures are down 7% in May. So, overall, it's kind of a reshifting or rebalancing in the market as a whole. You've seen some companies start to cut costs, which I talked about in the last podcast, number 222, with Walgreens being one of the companies that's cutting prices. McDonald's talking about the having different meal deals, their $5 meal deal that they're going to be releasing, and then their president himself even explaining how items are up 40% this year compared to in 2019. And so today, we're going to talk about the sponsor, Duck River Coffee. Make sure you check the link down below. If you're tired of old stale coffee and you want some fresh roast to order coffee, make sure you check out Duck River Coffee. Link down below in the description. So next, we're going to get into some penny stocks. So I know a lot of you all like penny stocks. They're very volatile depending on how you're trading them. Um, just bear in mind, uh, make your own strategy, trade it the way you want to. I'm not telling you to buy or not to buy, just giving you information and kind of what I look at indicator wise for penny stocks when trading. So the first one is Petco Health and Wellness Company Incorporated, which is ticker sign WOOF. And I thought this was also pretty funny. If everybody's seen that um, episode of The Office where Ryan came up with Wolf, I thought that was also pretty funny, which was kind of like everything all in one Wolf. So leadership changes for operational efficiency. So Petco announced significant changes in executive leadership team to simplify decision making, streamlining operations, and enhance agility. Its interim CEO Mike Moen emphasized that these changes aim to drive retail experience and restore profitability through faster and more efficient implementation of best practices. And so the new appointment, new role, there's quite a bit of people shifting around, but the main one is James Roth, who was appointed the chief store officer, bringing extensive retail experience from Abercrombie and Finch Corporation. You have Sherry White, who was named the interim chief merchant. With the search under the way for a permanent replacement, and then chief operating officer or COO. So these are C-suite positions, by the way. Role was eliminated, leading to the departure of Justin Tichy and Amy College. Chief Merchandising and Supply Chain Officer will leave the company in August of 2024. So basically, they're shifting around a lot of C-suite people, deleting some of the roles. But I think this addition of James Roth um, would be ultimately a good position for the company. Now, these are important roles because the C-suite really dictates how the company is ran. Um, so the way corporate structure works is you have the shareholders. So shareholders are, number one. Everyone is trying to get profits for the shareholders because it helps the stock price go up. Then you have the board of directors. So those are the people who kind of manage what's going on for the C-suite. The overall directive, they kind of advise the C-suite and tell them what things that they have experience with that can help push the company forward. And then you have the C-suite, CEO, president. You have the COO, CFO. Those things or those natures and positions. I think with the addition of James Roth, though, I think it's a pretty good fit. In my personal opinion, just seeing the numbers from Abercrombie and Fitch. So in the last video, episode 222, I talked about Abercrombie and Fitch, and they had fantastic numbers for the retail sales. And with him leaving from that company and seeing the numbers of Abercrombie and Fitch continuing to go up, I think they went up 22% in their profit, which is kind of unheard of in the retail market, especially with competitors like Temu and a lot of different clothing companies with cheaper alternatives that are out in the market, as well as people cutting back in these economic times, probably spending less, not buying more designer clothes, probably buying less. I wouldn't consider Abercrombie and Fitch like a designer line. I just know it's been around for a long time, And I would say with the structure and the team that was at Abercrombie and Finch, if he was incremental in having them have the numbers that they had there, I think his knowledge and direction can definitely help Petco Health and Wealth Company. So, lastly, the expanded of executive leadership team. This is done to support the goal of faster and more agile decision making. Petco expands its executive leadership team to include several senior vice presidents um, and senior vice presidents and vice presidents, covering key areas such as merchandising, planning, inventory, supply chain, and digital services. This restructuring supports Petco's mission to enhance the lives of pets, parents, and Petco partners through a comprehensive pet health and wellness ecosystem. So, if we go and look at their stock, they're currently selling or trading at $3.86 per share at the close of Friday. So, today, basically, and their moving average 10 is 377. Their moving average 20 is $3.81, and their moving average 30 is $3.72. So overall, I think the market reacted positively to this new addition or restructuring of their C-suite and vice presidents, with all these valuable positions being restructured and more people either getting promotion or hiring outside help to restructure this organization. So market sentiment is basically at a hold. So with two people having it at a buy, five people having it at a hold, and then one at a sell, they kind of mark it as a high target price of $5, a average of 264, and a low target price of $1.50. So if you're not familiar with what penny stocks are stocks that are under $5. So that's going to be the main focus of the rest of the plays that we're talking about as far as penny stocks are concerned. So if you never heard the term penny stock, it's basically a stock that's under $5. Once it goes above $5, it would not be considered a penny stock anymore. And so that's all $5 and below. So $5 being the target price. If it shoots above that, then it would no longer be considered a penny stock. And so $3.86, I think it's pretty good. It's going to take a while for those initiatives from the C-suite to really trickle down into an organization. I know making large organizational changes to senior vice presidents as well as C-suite can be taxing on the way things usually run, especially with people coming from different companies and running things a different way. A lot of those things take a couple quarters in order for them to be implemented and systems to be implemented into an organization. So ultimately, I think this may be a long term one to look at. But $4.05 is going to be the key target. So if you see, we have a range between $3 and $4.05. Uh, Definitely going to be looking at a range between there. Since it's kind of trading sideways at the current moment, but is bullish, I'm going to be looking at that $4.05 target. If it goes through that $4.05 target, they're going to be looking at a high price of $5. Definitely, restructuring of a company can be taxed on the company as a whole, but if new procedures and new tasks are implemented that can help growth in all the departments, it definitely is a positive. Next, I want to talk about a company called Momentus Incorporated, ticker sign MNTS. And so Momentus just recently had some news that came out. They got a contract award. Uh, Momentus Incorporated secured a contract with DARPA under the GNOME 4D program to design and demonstrate technologies for building large-scale structures in space. The program aims to transport raw materials from Earth for in-orbit manufacturing, focusing on creating structures like solar arrays, antennas, and optic significantly designed for the space environment. The collaboration and technology advancement for Momentus will look with other GNOME 4D or NOM 4D performers to design and refine experiments that will be integrated onto the Vigoride orbital service vehicle. These experiments must meet stringent launch and in-space operation requirements. The program leverages Vigoride's flexibility, payload capacity, and proprietary water-based propulsion systems to conduct on-orbit demonstrations, aiming to elevate the TLR or technology readiness level of GNOME 4D assembly and manufacturing technologies. And so this partnership with DARPA positions Momentus at the forefront of future in-space infrastructure economy, and by pioneering novel system level application concepts, Momentous aims to showcase the integrated benefits of GNOME 4D technology, overcoming current constraints on the type and scale of in-space structures and advancing its capabilities in space construction and utilization. So I think this is a very interesting contract. I'm not really familiar with what GNOME 4D is, but I am familiar with what DARPA is. They, big budget research projects that they do. GNOME 4D, I'd have to do more research on what that project specifically does. But I think this is good for the company as a whole. I remember reading articles probably a quarter ago saying that Momentous was struggling with financing. And so that was kind of a big red flag for a lot of investors on Momentous, them not really having funding or running out of funding because they didn't really have, large projects they were working on that could really fund the company. I think this is a good milestone for them having this contract kind of under their belt. I think GNOME 4D may be a pretty large program, but it seems like it's a pretty large task with some stringent goals that need to be hit. The definition of technology readiness level can be very vague as far as what that means, but it seems like DARPA does have faith that they can accomplish this mission, and so they awarded them with that contract. So going to some of the stocks information to analyze it, we have them ending the day 84 cents. So they are below a dollar. Stocks that are below a dollar kind of are, a little hesitant to invest in unless there's like really good news. When I look at a stock that's under a dollar, I kind of look at it as like, a yellow warning kind of jumps out because it's under a dollar. You want a stock that tries to go above a dollar, that is above a dollar, for it to not run into any problems with the SEC. And so, looking at the $1.06 target price is definitely something that I want them to try to achieve. This new contract they just got under their belt won't really develop, in my opinion, into another quarter, but it is definitely money they could put on their books for next quarter. So if they get some good financing under their belt and are able to restructure and rebalance the books a little bit with momentum from this new project from DARPA, I think definitely going to be looking at $1.06 for this company. Now they are bullish. Moving average 10 is at 81 cents. Moving average 20 is at 81 cents, and the moving average 30 is at 73 cents. I think it's interesting the moving average 10 and 20 kind of converge at the same level, and it blasted through both the moving average 10 and moving average 20 to get to 84 cents. So I think on that note, it is a pretty positive note that the market reacted in a good way towards this news from DARPA. But there is some financial woes that still need to be overcome, in my personal opinion, from uh, the financial department of Momentous. And then next we have Sharps Technology, ticker sign STSS. And so Sharps Technology acquired Inject Easy specialty syringe manufacturing assets in West Columbia, South Carolina for $35 million, marketing the only fully dedicated cyclic ophyllene copolymer or COC preferable syringe manufacturing plant in North America. The facility will be state of the art automated manufacturing, will enable Sharps to commercialize, innovate its copolymer perforable syringe system starting in the second quarter of 2025. So this is kind of forecasted out till next year or Q2 of 2025. So as far as sales are concerned, Sharps Technology has secured a 5-year sales agreement with Nephron Medicals, worth over $200 million for purchase of next generation COC syringes and SoloGuard polypropylene syringes. This agreement, in conjunction with the asset acquisition, is expected to significantly boost Sharp's revenue with projected earnings of approximately $37 million for the first 12 months of production and delivery starting in quarter 2 of 2025. So as far as future growth for Sharps, the acquisition and sales agreement position of Sharps Technology for substantial growth and high demand copy polymer copolymer preferable syringe market is the fastest growing segment in the syringe industry, with manufacturing operations in both Europe and United States. Sharp aims to accelerate its revenue and enhance its marketplace presence, benefiting from both patients and shareholders. So basically, in a nutshell, they make syringes, and they got a large contract worth $200 million for a 5-year deal with a pharmaceutical company to produce those syringes. So $200 million is not a small amount of money for a 5-year sale. I think that is a large contract. And then them estimating the projected $37 million for the next 12 months. Which I think is pretty good. So basically saying until the end of the year and then starting production. So once they start production in Q2 of 2025, you'll probably see more profits start rolling up, but it's going to take a significant amount of capital in order to begin the production of this. Now, if they can hit this date before Q2 of 2025 and start rolling out, some of these syringes or some of these COC, um, preferable syringes with their manufacturing capability, I think that'll be good. But definitely want to see the numbers on this, on how many they're able to produce, as well as how efficient their procedures are for getting these out the door. So going to their financials, they are bearish at the current moment. The market didn't really act too surprised when this came out. It definitely went a little bit sideways. A $200 million deal, I would expect it to have shot up a little bit to be bullish. So I'm going to keep a close eye on this one. It is kind of the ones that I say, has a warning label on it, in my personal opinion, because it is below $1. And this $200 million contract, in my opinion, should have had it to shoot up, but it did shoot up earlier. It went up to 82 cents, but then the market kind of, lost the hype from it and it went down a little bit. These you have to watch out for, though, as well, because a lot of people day trade these. They load up a lot of shares of them, expecting for it to go up based on news. But I think as far as the long term is concerned, if we could see money start rolling in and see production numbers for the syringes, I think it'll be good overall for the company. And so 38 cents is where it ended today, and then its moving average 10 is at 40 cents, moving average 20 is at 43 cents, and moving average 30 is at 45 cents. So I would look to see if this can break through 45 cents and then retest that 82-cent level. And then also with the numbers coming out, I want to see supply numbers for how many they're able to produce and how fast they can get those to market. And so lastly on here we have ONMD. So ticker sign ONMD. There was some news that came about them. OneMedNet has signed a non-exclusive 3-year master service agreement, or MSA, with undisclosed U.S.-based medical technology company, impacting over 150 million patients globally each year. Under this agreement, OneMedNet will use their IRWD platform to securely um, identify, search, and create regulatory grade clinical data for new customer and its worldwide subsidiaries that are affiliates. So they're going to be leveraging real world data, which is basically their IRWD, which is trademarked. Platform will provide medical technology company with timely access to comprehensive and accurate de-identification clinical information, including electronic health records, laboratory results, and medical imaging. This data will support various stages of medical device development, from ideation of post-maker surveillance, enhancing the company's decision making and competitive positioning. And so the platform for the company, OneMed's IRWD platform, manages diverse clinical data types across more than 1,400 healthcare systems and provider sites. The platform is designed to meet medical clinical requirements in areas such as rare disease, oncology, cardiology, offering robust research support, services to aim to improve patient outcomes and drive healthcare innovations. So I think this IRWD is very interesting. I don't know if they use AI to kind of build these models with the data that they have, but it helps them to develop new equipment to help with research as far as disease detection, fighting rare diseases, oncology and cardiology research. And I think having more data in the system, having 1,400 healthcare systems providers that are already using it, I think will help overall. I think there's kind of a gap in the medical field. You used to go to, the doctor or hospital and you get your information, or, they solve the case and you get a prescription and you kind of leave. But I think nowadays people kind of want access to that data. Like if you get an x-ray, they want access to it and be able to access it from an app to show, hey, this is what happened, or these are things that happen along the way, kind of keeping hold of your own medical data and storing it yourself. I know there's an app that my wife uses through her medical care provider, and it kind of has helped, get all the information from every time you go to the clinic. You kind of store all that in one place, and I think that's a similar thing that this IRWD is doing, and having that information there um, handy for yourself. Now there are, HIPAA law things that are kind of different areas that I don't fully understand legally that go with that, but I think having that data and using that data, as long as you get permission from those patients, to help fight other diseases, and potentially using AI to do that and research that data in an ethical way could help the future of medical care. And then it also helps with doctor and patient confidentiality. So, like if you have a visit and then there were things that you had on the visit, if you don't remember those things, and then they write out a statement, you can always go back and look to see, hey, this was the outcome of that doctor's appointment that I have. Now, this may be a generational thing. As far as I don't think the older community of people would use this IRWD, but I know like maybe younger people who are used to using phones or having everything at the touch of their fingers may be able or may be more inclined to use this as far as having the data there. But there are still people who have like security risk, like who is able to see my data, who is getting my medical information, where is this stored, is it a secure location on where it's stored. So I think overall, having sort of new technologies that are out here that can store your health data and you can access it yourself kind of helps you to take control of your own health for yourself, and then also to work with your doctors um, to help make you better or help you with your ailments. So lastly, going to jump into their stock. So after the announcement of this 15-year um, partnership that they had, the stock kind of went sideways. It jumped up a little bit to $3.37, but ultimately went sideways to $2.42. The moving average 10 is at $2.45. Moving average 20 is at $2.47. Moving average 30 is at $2.41. So it's kind of hovering, in between that moving average 10 level and that moving average 30 level. So kind of right in the middle of that. Gonna be looking to see if it can break through this moving average 20 level, which is at $42.47. If it does break through that, then I'm going to be looking to see if it can retest $3.37. So drop a comment down below. Tell me which stocks you guys are looking at. If you like the penny stock playlist and penny stocks in general, make sure you give a thumbs up down below. Also, drop down some tickers in the comment section on which penny stocks you will be looking at this week, or any stock in general that you're going to be looking at this week, and I may add them to the review list. So good luck to everybody out there trading, and I'll see you guys on the next one. Peace.